The ARK fund returned a staggering 615% since 2015, while the S&P only returned 111% and the QQQ only returned a 232%. So it clearly outperformed in this time period. This is a fund which is very tech heavy and very story driven, meaning that it doesn't care too much about the fundamentals or the past track record of the companies, but it invests in companies which they believe that will shape the world. However, since 2021, it has sharply decreased in stock price, to the point where the ARK fund is now underperforming in relation to the S&P 500 when taking the same time period since 2015. Does this mean that this investing strategy actually doesn't work and that it was all powered by the hype? Well, their biggest holdings right now are these ones. Coinbase being the largest one, sitting at around 10% of the whole fund, and it is in the sector of cryptocurrencies. Then we have the all famous Tesla, which is at around 8% of the fund, and it is, of course, in the automotive industry. Then we have Roku, which accounts for 7% of the fund, and it is in the sector of streaming, so competing with giants such as Disney or even Netflix. And last but not least, for the biggest holdings, we have UiPath, which accounts for 7% of the firm. And it is in the sector of robotics, so it focuses on AI, automation, and all of that. We will analyze the woman behind it all, Cathie Wood, the founder of ARK Investment Management, and how she actually got it to this level and what her investment strategy really is. Well, ARK reached a peak of $50 billion assets under management in 2021. However, since then it has actually decreased a lot, as you have seen by the previous graphs. She focuses on long-term visionary companies in fields such as, of course, self-driving cars with Tesla, or even genomics, which is altering the DNA sequences of humans so we can live longer. She looks for disruptive companies which could change the world. So for example, genomics could very much change the world. If a treatment was invented which could make you live 50 years more, people would pay priceless amounts for that kind of thing, and it would actually change the world. She is undertaking extreme growth investing, and she is very determined by the vision of the company more than by their past track record or their current fundamentals. Her philosophy can be built on 5 different pillars. Her main one and the central one, as we have just previously stated, is of course the vision and the offerings of the companies. She is in favor of everything that is shaping the future today, from cryptos to AI to renewable energies, human genome, which is what we have spoken about of the DNA sequencing, or even robotics. She wants to own the companies on the future, so she has a very long-term view. Or what she's trying to do is imagine if 10 years ago you were investing in Amazon, or 15 years ago you were investing in Apple, or 20 years ago you were investing in Microsoft, when nobody actually knew the companies, and imagine the returns you would have generated if you did that 20 years ago. So that is her strategy right now. Growth. She is investing in companies which are forecasted to double their value every 5 years. If the growth rate is less than this, she does not even look at the company. She's investing in early stages, early startups, scale-ups, or even very hyped companies in the public stock market, without even putting some emphasis on the past track record, predictability, or even fundamentals of these companies. And of course, she wants diversification. She's looking for that one golden stock, and to compensate for the risky investing style where a lot of these companies could potentially go bankrupt, she likes to compensate this investing style by investing in many different stocks, by spreading her eggs in different baskets, and by making sure that she's not risking all the money into one stock, which could potentially go wrong. If you would like to invest like her, she has 6 different points to consider. The first one is she carefully selects the areas of focus, and she only looks for companies in these areas. These areas are areas that she believes will be the major drivers of growth and economic output in the future. These ones are, of course, the first one, the almighty artificial intelligence. The second one, the DNA sequencing, as we have spoken at the start of the video. Third one being robotics and automation. Fourth one being energy storage. And the fifth one being blockchain. Second one is that the innovation should cut costs, span through different sectors and geographies, and foster more innovation. There is no point for an innovation if, first of all, it doesn't cut costs, it is unreasonably expensive, and there is no market for it. So by ensuring that the companies they are investing in are cutting costs, spanning different sectors, and fostering more innovation, she is attracting those companies which will be the future Magnificent Seven. For example, one of these companies could be Netflix. Netflix came up as a solution to cut costs, span sectors, and even foster more innovation against Blockbuster, which is a company where you had to go rent your DVDs physically. And look where Netflix is at now. They have cut costs by a lot, they are now global and worldwide, and they're even fostering more innovation by including even video games in Netflix and changing even their pricing strategies by, for example, offering a pricing plan which now includes ads and allows them to generate even more revenue off of that pricing plan than the rest. So number 3, these companies have to be research leaders. They have to be at the forefront of innovation and leading their respective fields. You want the company that is at the top of the game in their respective fields, as that will be the long-term winner or the company with the most probability of success if that industry starts to play out. Number 4, financial analysis. She also likes to look at, of course, evaluating the performance, the stability, and the growth potential. Because when you're investing in a company cannot survive if they're not growing, if they're not providing stable revenues or cash flows, and if they don't have a solid performance. So you should obviously consider that when checking for these companies. Number 5 is to evaluate the management team. The key here is to find a management team which is very competent and has a great vision which is aligned with the company. This is a key factor in the decision, and you should check at the track record of the different people in the management team. And number 6 is to constantly be monitoring your positions. If you track the progress, you will ensure that the investment thesis holds, and if any fundamentals change which you don't like, you will be able to sell out of the stock before it goes wrong. So some important information and some quick summary on her investment style. For effective investing like Cathie Wood, you should first of all find scalable and demanded for innovation. Check for innovation where there is a huge market that can span different sectors and that cuts costs. Next, you should always focus on the 5 areas of focus that she is placing emphasis on. As she says, the majority of the growth in the future will come from these 5 sectors. And finally, through continuous monitoring, you will ensure that your companies are stable, progressing like you wanted them to be, and also checking whether something goes wrong, and you'll be able to sell before anything happens. So thank you for watching. As always, this has been the Cashflow Compounder. Join the free Patreon for extra content, and there is a link in bio for a free stock if you join Trader Republic or Trading 212.